Well, happy Friday, May 22nd, 2026. Are you guys looking at the right silver chart? If you're like me, you probably are not. Stay tuned.
The following is presented for informational and educational purposes only. This is not investment advice. Please consult your financial advisor. Thank you.
Okay, so before you, we have the XAG USD silver US dollar chart, which is the spot rate of silver. And it occurred to me somewhere in the middle of the night this week that did any of us actually pay or receive spot when we were buying and selling silver during this period of time? And the answer, of course, is no. Some people in Shanghai were purportedly getting $140 or giving $140 an ounce. People here in the States were disappointedly getting just under $100 an ounce, all around the same, roughly the same peak periods. Who knows what the bid-ask spread of dealers was? It's a lot of noise, right? So I think if you're like me, like most people that I've seen, you took the spot chart here, XAG USD, and started to create this pennant or this flag or something of that sort, right? This is a consolidation period. When is it going to end? When is it going to break out? And this is all right. There are a few clear problems here, right? So you have really long wicks, and then we have humps that don't quite make it to uh, to the top of various trend lines, right? So when I first drew this out, I'm like, oh well, this hump just doesn't make the trend line. Maybe the trend line should be lower. Maybe it should be a different angle, so forth and so on. So I'm just going to say stop right there and go to SI1, the front month contract. Make sure that you are running logarithmic, of course, and this little button says set or use settlement as close on a daily interval. And you are going to see what to the naked eye looks almost like the same chart, but that's where kind of the comparisons change. So if just for the sake of, I've got weekly candles here. So for the sake of illustration, I'm going to convert this is the weekly close line, right? So we're going to use, I'm going to use lines instead of parallel channels. And we're going to replicate these lines and not change them in the angles and so forth. So we're going to draw just the standard trend line, triangle, etc. That looks pretty clean. We're going to draw it, replicate it. I'm going to put it right there. Oh, what do you know? Okay. So far, pretty clean, as the kids say. So let's put the candles on, see how we look. All right. Okay, so far so good. All right, so now flip over to the daily, flip back to the line, flip back to the daily, and zoom out. Notice that the daily close and the weekly close are roughly on the same trend line, and you have better definition here in the daily. We're just going to take this trend line and replicate some more up here. What do you know? That's basically the same angle. Okay. Let's see. Let's go ahead and put our bars. Okay. So keep that parallel going. Here, don't be confused by this is where the market opened and gapped up into the channel. So we'll go ahead and add these trend lines to the wicks and add one up here to the wick. Okay, so this is where it gets a little crazy. Okay, so there's our angle, right? That's really the shape of the flag. And if I were to take there's all kind of reasons why, as a trader, we want to see this angle very steep here. We want to see this angle, let's see this guy. This is about 60 degrees right there. So kind of line them up. So if this is 60 degrees, we want to see the time consolidation to be about, we want to see it flatter than 30 degrees. And this is 30 degrees right in here. So that this satisfies, just from the relationship of parabolic move to time, it satisfies the bull flag consolidation pattern. So that's I'll take that off. All right, so another thing we've got here is if we put our lines back in. Now keep in mind these, I'm not sure what every dealer is doing, but I imagine that the close date, close weeks, particularly that the price, these have more importance, higher weight relative to just intraday, because settlements at coin shops and various other places, right, are much more based on these daily and weekly levels. So it helps to turn off those candles. All right. So at this point, naturally, I'm thinking, well, surely this is Fibonacci, right? So let's take the angle we've drawn in our, actually, that is not the one I want. I want the non-extending one. And okay, there we go. It is non-extending. Okay, so we're going to take this. So we're going to go to our weekly, back to the line. Space this out a little bit. Okay, so we're going to just draw our 1 and 0 are going to be, let's see, we're going to make it up like this so that we're extending upward. So 1 is going to be, 0 is going to be, sorry, is on the bottom. Let's go ahead and just line it up with our weekly close line right there. Maybe we're right there. Maybe I have the angle slightly off. All right, so, and then I'm going to take the 1 and I'm going to stack it right on top of these touch points. There we are. And the magic charting, there we have it. So 0 is, we'll go ahead and pull some of the lines that I drew off. So 0 is the weekly close trend on the bottom. 1 is the weekly close trend on the top. And the 1.618 actually on the daily chart falls right at the pivot highs of a parallel channel above the primary parallel channel. You can see this week we experienced a back test of that top level channel. Okay, so other quick observations. Obviously 618, this green line is really important. Let me turn this off here. How about get rid of 786? We'll leave halfway out for just a minute, just to see. Okay, so here we have the 618. We retrace to several times. We retrace to the 382 on the daily, and then we got trapped underneath it early on with it. These are all just parallel channels. You can see them going. Actually, these are the most important to have on, are the actual primary Fibonacci numbers. The 0, the second order 382, the primary 618, and then obviously the 618 extensions. You can see a little bit of a double top hit the 272 extension, but primarily it's just your fundamental Fibonacci numbers. So this, what does this tell me? This tells me that is the consolidation flag, right? In a number of flavors. So go back to our weekly. So conventional wisdom says right here, we need a weekly close what are the criteria to call this a signal, right? So we need a weekly close above this line. I'm going to make it orange and larger. So we need a weekly close above this golden line. And I'll make just a black line here. And then we needed probably 2 daily closes above this line, but you have the fractal inside of the bigger fractal situation here. So something to think about when you're positioning. So let's put a parallel up here. I think you kind of clear through maybe this area in the dailies, and we're going to start to see some faster traction perhaps. But so there's a lower trend line here that has emerged. I'm not sure that's going to hold. We could make another retest to that 200-day moving average. And there's another sort of concern that this has some time left in it for me, is I'm looking for bullish divergence in, this is the DMA, but in the RSA, I'm looking for bullish divergence, and we're not really getting it yet. So everything is lower highs are moving down, and the momentum, lower lows are not moving down relative to the lower low, the higher lows, sorry, moving up. So we could still, I think it's sensible to suggest we re-enter the channel and set in another low, maybe not below this peak low, but at least test the 200-day. However, I think the key line right here is going to be, let's see, the next time we interact with it, somewhere around $73 if we go down, breaking out of that, and then ultimately breaking clear of this 88 is going to say, and of course you can see how whatever that path takes, if it takes something like that, that now we've got a head and shoulders what we kind of expect we would see. But I sort of, based on this flag, I'm not sure. I was fairly strongly convinced we would retest these previous all-time highs in the lower 50s, mid 50s, and I think that's going to be a pretty tall order. We've just gotten too far away, and there's too much support. And this line, that the rule of thumb, 4th and 5th touches of the overhead, and if we look here, we had 1, 2, 3, and we broke on the 4th touch, and we came back. We're back testing the inner channel. We've made 2 touches at the top, so we could just decide to consolidate in this range for a while and make these multiple touches, and then before going higher. But any of those are roughly equal probability. So I think as an investor, you have to not completely hold your capital back thinking, well, we're going back to this $54 level or the $55 level, somewhere in there. That's just not what it's saying. So SI1, these would be the futures that close at the end of the month using the weekly close candles and the daily close candles. I don't know that you get. But yeah, take a look at that on your own, guys, and we'll see you on the next video. Thanks.